Welcome to this little video. Today is a bank holiday, which for me is an absolute no trade day. I just got home from the gym and thought about why not talk a bit about the way how I trade, and I wrote down the things that are important for me. I will not talk about every bullet point, but about the important ones, I would say. I call it the framework. Master your mind. What is meant by this phrase? I think trading is difficult because you need to control yourself. The trading itself, the executions, is pretty doable, I would say. It needs some learning, of course, but if you're just good at executing, that doesn't mean you're a good trader. A key thought I had is know when to not trade, because you will always find an entry or reason for price to be bullish or bearish, but try find a reason to not take a trade. It can be low volume, off session, something like that. So in general, detachment is key. What is meant by this? I think it's important to understand. You get greedy, you overtrade, you revenge trade when you really focus on making money. I think it's important to stay focused about your future goals, not your goals at the end of the day, and respecting your rules. That's really important for me. The next one, trade what's happening, not what could happen. The charts tell you a story, and you only can tell what's happening. You can't tell what will happen. I don't believe that's possible. But if you trade what's happening, you kind of get into what the market does, and that's the goal for me, I would say. I only trade 9:30 to 11 and after 2 p.m. Most of the time just opening range breakout. The next one, don't rush. Staying out is better than a rush trade. What is meant by this? I personally think it's better to have a day with no profits rather than a day where you just rushed the setup, hopped on charts 5 minutes before open and thought about something what could maybe happen. And even if you made profit, ask yourself the question, was there really a reason for me to take this trade? 5 trades per day max. I usually take about 2, maybe 3, but most of the time 1 or 2. Stay away from consolidation. I think that should be clear. You want to catch a move, not a barcode chop around. Trade management. Find a reasonable entry and a stop where your analysis is invalid. A reasonable entry is a market entry after reaction of some level reasonable? No. Entry of a CISD or inverse gap, that's a reasonable entry. And the stop is simply, I put it at a point where I find confluences. My trade won't go in the direction I wanted to go or I thought about it going. When talking about the stop, we need to talk about break even. I usually target low-hanging fruit and some high time frame target. Low-hanging fruit could be an unfilled 5-minute gap, internal liquidity, an unfilled 15-minute gap, and a high time frame target could be like a 4-hour gap or external liquidity. And I move my stop only after some targets are hit, or I can say, okay, if we reach back down there now, I'm simply wrong. Daily profit target is just if I close a trade and I'm above $1,000 for the day, I will not enter a trade again, which doesn't mean if I'm up 950, I'm going to trade more on that day. And really, really, really important, accept the loss. Because you get stepped out, that doesn't mean your analysis is wrong and you can simply re-enter. I think the best is to just stay out and accept it. That's what's written down. The next one, study, especially if I miss a session or if I miss a move, don't get in. I look for points where I could have got in and try to learn from it. I review all wins and losses. I think the losses are way more important to review just because there always is a reason, which doesn't mean an A+++ setup always wins. That's not meant by this. But most of the time you lose because you missed something, and learning from that is very important. I usually take the weekend to review all trades I took and prepare for the upcoming week. Execution. simply two questions. Am I entering based on a strategy, my strategy, or based on revenge or fear of missing out? A question you should always asking yourself, and I think we talked about it enough to you understanding what needs to be the right answer. Is my setup aligned with my conditions? For me, I usually only trade AM and try to get in a trade before 10:30. So if I get in at 12, the setup is not aligned with my conditions. Simple as that. Top-down analysis. What do? I check for news, I check for the economical bias, and then hop on charts, determine high time frame bias, 4-hour, daily. Just look where could the daily candle reach, where could the next 4-hour candle reach, what was the last drawn liquidity, have we respected any high time frame fair value gaps, things like that, and what's the next reasonable drawn liquidity. I look for key levels, new week opening gap, new day opening gap, external, internal liquidity, and key times. For me, most important is the New York midnight, the New York 6 p.m. where the new daily candle opens, and 10 a.m. open where the New York session 4-hour gap opens. And look for clean and reasonable price action. So if I just see like weird chop around, I usually just get off the charts and do something else. Primary concepts. These are like the very basic explanation on what I use and how I use it. For value gaps, I use them as key levels on a higher time frame, for example 4-hour gaps, or as an entry on a lower time frame, a confirmation. Let's say we inverse a gap, things like that. A new week opening gap gets filled almost every time, which doesn't mean, I repeat, which doesn't mean we push down and you take a long because we fill it always. That's not the point. And I usually keep it marked out the whole week because we often like rebalance into it or reject from it, things like that. SMTs, to be honest, I usually don't. SMTs, to be honest, I do not look always for them because I just experienced they aren't a too strong confirmation, but I'm always happy to find one. Let's say it like that. And they are a good indicator to trade the stronger asset. Let's say NQ has swept the high, ES hasn't, I would trade NQ, or the other way around. Market structure shift, change of character, used as a confirmation for a reversal combined with the change in the state. I usually take that as an entry point if I trade a reversal, and a break of structure just as confirmation for trend continuation. Primary strategies. I think that's my main setup. It's the M5, M15 opening range break. I will not tell that much about it because I have a separate video about the opening range break. Then the MMXM, pretty similar to the forever model. You can call it how you like it. You look for a high time frame key level, fair value gap, order block bigger than the 1-hour time frame, so usually the 4-hour time frame. Wait for a tap in and an internal sweep with hopefully an SMT, that would be even better. And then wait for the reversal signs like inverse fair value gap, market structure shift, combined with the CISD. You can enter on that, or you can enter on an inverse fair value gap on a senseful time frame. If you look for a 4-hour gap and a rejection from it, 1 minute inverse fair value gap is worth probably nothing. And I usually target unfilled 15-minute gaps and opposing liquidity as a final target. And for the last one, AMD PR3, I think we all know what is meant by this. If I trade it, I usually use the 10 a.m. open and wait for price to accumulate, and then tap into a higher time frame P-Day array usually 15-minute gaps, 1-hour gaps, and look for strong displacement before looking for an entry. I always look at the lower time frame, see, okay, we start accumulating, and then switch to usually the 4-hour if I trade the 4-hour candle, and look, okay, where could that 4-hour candle reach to, then align my lower time frame setup with that higher time frame analysis I just did. Look for confirmation for a reversal after we swept the consolidation range and higher time frame beta array. Yeah, I think that's it. That's the basic idea behind how I trade. And if you have any questions, leave them down in the comments. Thank you very much for watching.